Hello traders, Jason here with SwingHigh.com for your weekend review for the week of November 9th through the 13th. Let's take a look at the markets. On Friday, we had a nice gap up on some very bad economic news and then sold off hard on very convincing volume. However, there was a fake out breakout here because we broke down under a support line. And it looked like we were just going to, end the day in super bearish territory. It was just going to be a great day to be short. In all honesty, this breakout right here hurt me because I added to some shorts here and then failed to get out of them quick enough. But I'm not entirely a day trader, so I'm okay because I'm betting that on the longer term time frame we're rolling over here. I'll show you that in a minute. Anyway, we broke down on convincing volume, tagged the lows of Thursday, found support there, made a tweezer's bottom, shot up, and then we have this bull flag formation, which is a bullish formation, broke out of the bull flag, made a high base, even broke out above 110 a couple times, tested that, but no real significant close above 110 on the 5-minute chart. So we have this high base here, and then the high base broke down, made a low base, broke down. Then we sort of chopped around, made a symmetrical triangle formation, and then broke out of that and finished the day in slightly bullish territory. And so, because this is my weekend review, we're going to look at some broader time frame action here. As you can see, this is the daily chart of SPY, which is the S&P 500 tracking ETF. So we have a large uptrend going on here. Obviously, from back here in March, higher swing highs, higher swing lows, except for right here where we made basically a high base formation, head and shoulders that failed to break down on good volume. So from there, we made higher swing highs and higher swing lows. And now we come up here to the 110 mark, and we sort of made an equal swing high. It's not a perfect double top formation. Well, it's not even a double top formation because it's not confirmed yet, but it wouldn't be a perfect double top formation. It would be okay. This could be considered a jab. It is a doji at the top of an up leg. We do have rolling over action. However, this is not a down leg yet. This is right now it looks like either a bull flag or a small pullback of a sort. We don't have a lower low. We do have a lower high, but we don't have a lower low on Friday's candle. So it's not a down leg yet. We'll have to see on Monday if we make lower lows. And if that's the case, I would want to see the markets come down to, well, we definitely find support at 108. That's a huge support line. And then I'd like to see these lows tested for the bear side. We do have a rising wedge formation still. You can draw that in multiple ways here. You can draw it like this, and that's the way we had it drawn in my other platform. So those two lines, you have a rising wedge. We broke down out of the rising wedge, but turned around and came back into it. And now we have this ascending triangle type formation, which is bullish. And the looks of this say that it could break out to the upside. We have to see where we stop on the next down leg, though. Let's look at the Russells. Or, no, let's look at the SPY weekly. So, the weekly was also in this rising wedge formation, broke down, found resistance at the bottom of the rising wedge, and now we're back in the rising wedge formation, sort of making a high base here, or ascending triangle as well on the weekly. So that's it for part 1 of your weekend edition. Stay tuned because part 2 is right next.